Right on, everybody. Thank you for taking the time. I know you guys and gals must be exhausted by now. It's a lot of information. I just enjoyed listening to Shane as well. He and I sound like we could be cut from the same cloth there. Before I get started, my name is Nic Chahine. I'm very conservative, and that's a pretty important piece of the puzzle there, but also very competitive. I too have a black belt in Taekwondo, but I've recently switched to Muay Thai, which is a much more violent sport, and I did experience what Shane just mentioned. It's like training against the pros trying to take your head off. Well, that happened to me Thursday, and my head's still shaking. So it's pretty important to, all of his points I preach in different words, all of his points excellent and very well said. All right, so jumping into our presentation, let me make sure I've got a pen here, okay? Disclaimer, obviously investing, regardless of how well you do it or how conservative you are, there are risks involved, and I'm sure you've read something like this 100 times, but it's also always good to remind ourselves. And I'll give you a couple of seconds to do that. As far as practicing, makes it easier to take losses when it's needed. You just have to practice taking the small loss as opposed to waiting for the big loss to happen. I think is one of Shane's points were very important point. Okay, let's jump into it. Thanks for the introduction, Reed. That was pretty humbling. I don't come from Wall Street. I did not work for Goldman Sachs or anything. I'm self-made. I'm from Main Street. I'm an engineer, electrical engineering from start, and then jumped into marketing and finance. I do credit spreads. My credit spreads are over 90% winners, and know that 10% does not blow out all the other profits if you manage them properly. I have over 40% return over 2 years, and it's not the impressive part. The impressive part is that I do it from safety. All of my trades, when I enter them, are 90% theoretically safe. 90%. So I'm not like chasing, I'm not trying to swing for the fences at every at-bat. I go for base hits, and they're consistent. All right, so let's jump into things. The agenda today is pretty straightforward. 4 bullet points, and I'll try to keep us tied into those points as I'm going along. Recap of where we are, because we are going to look into credit spreads and how we can use them in 2015. So before we use them, we need to know where we are. So like the red dot, you are here. What's on deck? What's at play, basically? What are the variables? And how can I develop a thesis? I need a thesis to trade. Without a thesis or fundamentals, I don't trade. I'm a fundamental trader. I use technical analysis, but not as a basis to find the trades. And how I trade, what's the method? All very important. So where we are, let's recap. Step number 1, let's recap where we are. The S&P is, and the Dow actually are near all-time highs, if not at all-time highs every other day. Party hats at Dow 18,000, then have to give the hats back, and we almost put them back on Thursday. So a pretty violent move, right? So it's pretty impressive. And in fact, I think the S&P is a double probably, if not more, since 2011. The small caps are close to all-time highs. It did poke through not too long ago, but now fell back. So they're a pretty good indicator. I mean, it's a basket of 2,000 stocks as far as index is concerned. The NASDAQ is at somewhere around 14-year high or so, near the highs of the dot-com bubble, and I'll show you that in pictures earlier. And what else? We have extremely low rates. We all know that. The Fed's on our side. Extended period of time. Oh my gosh, will they take it? Will they won't take it out of the statement? Everybody's so consumed by it, even though their stance has not changed for 2 years at least. They're here for as long as they need us and for as long as the data allows them to do so. Period. Stop interpreting what they're trying to say word for word. The message is the same. All right, so the QE ended in the U.S. It's ongoing in Japan. They surprised us on Thursday night one time. The next week, China surprised us with another QE. And the European QE is expected next week, or the 22nd of January. Gosh, help us if we don't get it. And because the market is expecting it. Have they priced it in? Never. When they announce it, they run up. Every time Draghi speaks, we run up. But when the event happens, if it's sizable, we will run again. If it's not, we will pop and then sell. This is my interpretation. All right, so this is a recap of the current situation and some of the variables that we were working with. So let's put it in pictures. This is 2 years daily. A lot of busy lines because these are actually my charts that I use. So I didn't want to reinvent the wheel. This is October dip that we completely rejected. But you can see we have higher lows, yes, but we have a consistent trend. A couple trends I want to point out. This is a 2-year-old trend that got poked in the October and maybe just a little bit recently and maybe just a little bit last week. But we didn't close below it last week. And now we're trying to go back to that lid that we've had. It's kind of like a lid if you visually, So we're trying to do these inverted scallops ascending, whatever they're called technically. But the point is we're squeezing the range. Now the range is tightening and the moves are more violent. So this is where you need to tighten up and be cautious. So that's the perspective of where we are in pictures for the S&P. How about the NASDAQ? The NASDAQ is also, this is 2 years. It's also had some sort of a lid. And more importantly, I'm a little more worried about the NASDAQ because of this here. We have had a high, a lower high, and a slightly lower high, and I'm interested in what we do here with this little bounce. Also, another point, we broke trend, and when the trend breaks, we're fighting for it. It's not quite broken, but when the trend breaks, it tends to overshoot one way or another. If it breaks to the upside, it goes to here. If it breaks to the downside, it goes to, I don't know. This is where it went in October. So it's important to just put it in pictures. Here, speaking of pictures, here's another picture. That's 20 years of the NASDAQ. Same index. That's the dot-com bubble where everybody thinks, oh, that's where look where we are. This is 1 month. Every tick is 1 month. Look at that. That's the highest close. Look how close we are to the highest close in the month. That little tail is, didn't last a month and goes and then sold off. So I'm not saying we're going to do this because the slope is a lot steeper than this, although this is a steep slope, but look at these, 1 candle, 2 candles, boom, 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 boom. They were selling eyeballs or whatever. So this is a different makeup of a run-up, but it's still at these levels. So when we get to here, what are we going to do? Are we going to leap up? I don't know. Fundamentally, I would need another reason. The fundamentals have not changed for over a year. Same deal. We've got the same. U.S. is doing well. All the rest is struggling. China's iffy. Japan's stagnation. Emerging market now in trouble because of oil. So the fundamentals are the same. I need a reason to run up. I don't see it yet. That's part of the. It's an important point for later. Here's a closer look at the NASDAQ, and that's that range I say we're fighting for it. Look at that. Whoopsies. So we're fighting for it, and the outcome is still unknown. So that's why you stay small. You don't need to trade every day. You don't need to fight at the battle. There are ways to fight the battle with binoculars without getting hurt. Small cap pictures. Here's another thing I worry about. The small caps have been incredible, on fire. In 2013, they spent 0 days under the all-time high of 2012. So from the 2012, we had an all-time high in 2013 and not 1 day below that 2012 all-time high. That's an incredible feat. Same ascending inverted scallop that got us all the way up. But look at that now. We were up, and now we're like chop, 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 chop. And each chop is even bigger than the other one. This was the October correction. We immediately rejected it, and then this box right here is being thought this was a fail, fail, pretty much with a poke, fail with a poke, failed, fail, fail, fail with a poke, failed. What do we do now? All right, so it's all up in the air. Here it is in pictures. Now you can put words with visuals. So what else is at play? Okay, this is where we are as far as indices, as far as markets. Small caps we looked at, NASDAQ we looked at, the S&P we looked at. I don't look at the Dow, it's only 30 of them, so it's not that important to me. Oil. I know you guys already have seen, the gals have already seen oil charts today. This is a 15-year monthly. Every candle is 1 month. Look at that. I mean, this is one time it got challenged in 08. And here we are now. Is that a bottom? I doubt it. Oil is a rigged market, period. There is an outfit that controls price, controls volume, whatever they want to do, they can do. And I can't trade that. I just use it as a gauge. It's going to be low for a while because it's an economic war. and they're not using bullets, they're just using oil prices. And can it stay low? Yes, it can. Look how long it stayed low here. They're okay. So, but it's part of the puzzle. We're still trading with fear of it. Okay, and another conundrum is the bonds and the rates. Why is it a conundrum? Because everybody thought one thing in 2014 and something else happened. So let's look at them in pictures. We've got the bonds, the TLT here represented. This is a 15-year monthly, and they're looking at a breakout. So they're revisiting a previous high. Will they break out, and if so, how far will they go? So you say, okay, you know, I can't really guess at this point. All right, so I guess I need to look at it from a different perspective. This is a daily, and you can see here we've had, you know, it's like technical heaven, right? This is cup and handle thing that forecasted this move. Once it got to here, you know, you can argue for another cup and handle looking thing right here, which will get it up to here. And then what's here? Oh my gosh, look at this bowl, you know, cup and handle. So anyway, so now here there is a cup and handle, and I think the target can be 136, 137. So everybody called it dead at 132 here, and yesterday it bounced really high. So that's a riddle there. How about rates? So the 10-year rates is important. They're so low, and the Fed cannot have them rise because they owe so much money, and they need it to stay low for a while. So even if I have a variable rate on my house, I'm not that worried about it. All right, so what's on deck? So this is where we are in pictures. What are the variables really are the variables? First, we've got geopolitics. We've got Russia, Ukraine struggle, the Middle East conflicts, unfortunate France event, and then you can grow the list as much as you want. Geoeconomics. You've got the Eurozone and Japan deflation. China growth is a big question mark. Yes, they tell us it's 7% or whatever it is, 7.5%. Is it really? A lot of people doubt it. How long can they sustain it? Why are they pouring in so much money? That worries me. Now they're starting to loosen up the lending. I thought they wanted to tighten it up. So I don't know what's going on. It's a question mark at best. And oil. Is it a great reset? Are we here forever? Were we fooled? You know, the $100 oil is no longer, you know, suddenly the demand got cut in half from 100 to 45 or 50. I don't know. This is beyond my pay grade. Is it a political war implement? I really don't know. The currency race to the bottom, as they say. Everybody's devaluing except the dollar because we just stopped doing QE. Everybody else is doing QE, so a strong dollar, that contributes to oil because you need fewer dollars to buy the same barrel. So strong dollar contributes to that problem. Also, we have Fengineering, which is every company is doing financial engineering. I made that up. Feel free to use it. So they're buying back stock, splitting, you know, doing this, doing that, all but instead of investing in growth. Go out and buy a company as opposed to giving money back to all of the shareholders. All right, so the U.S., you got the rates and bonds conundrum. We already mentioned that. The economy, it's doing well. I mean, we just had a job report that everybody was scared, oh, they were going to revise the other great report lower, and they revised it higher. It was like not only it was good, it was even better than good. And this one is good. And now unemployment is like 5.6% or something. When I grew up, my textbook said full unemployment is between 4.5% and 5.5%. So we're fully employed. So where's the fear? And then you've got inflation. Is it deflation? Where is inflation? Can you measure it? I can measure it. I'm paying more for stuff. But there's no wage inflation. Wageflation. And then you get the surprises. What kind of surprises? How about Ebola? That was a big surprise. It's an unfortunate surprise. Thousands of people died. Yet we covered it less than we would cover the Sony, you know, movie debacle. So what can I deduce from all of that in order to trade? Before I trade, I need to make up my mind. Okay, I know all of these. I just ran through quickly because we don't have a lot of time. I can spend an hour on every page. So I need a thesis. So what is my thesis? What is a thesis? It's a macro view. What does the world look like before I can trade particular companies? I need to know what the globe looks like and where we're headed and what the prospects are and what we're doing and what's happening before I can trade Apple. You know, Apple could be doing great. If the world is collapsing, Apple is going to go down. So there's no, I wouldn't go along it. So I need a thesis. That's called a macro part of the thesis. So the macro, nothing has changed. Absolutely nothing has changed. All of these things I just mentioned have been true forever. It's just, different words. And when they disappear off the headlines, market puts blinders on. But they know they're there. They just don't trade according to them because they're not in the headline. Okay, so the macro has not changed. We are at or near all-time highs, yet you should leave room for more upside. That's my thesis. Okay, so even though I want to short everything, every pop that doesn't change, every pop that comes from relief that something bad did not happen, as opposed to something good came in, a new fundamentally driven factor that's going to drive us higher, I short cautiously, leaving room for upside. And I'll tell you how. It's doable. So the trade would be cautious shorts and long a few takers to hedge. So yes, I can't short everything. And if I short a whole bunch, I need to at least to go along a few things in order to hedge. Do I hedge everything? No. I consider hedging everything. But first, develop the macro, then the micro. So once I know the world, the concept, then I look for tickers that I like. If I like Apple, if I like Google, if I like Twitter, etc. And the micro, this year, based on now, I have a few long-term bullish calls that if somebody twists my arm and say, you want to go long something today, I would choose Alibaba when it comes down to 100. By the way, Alibaba on the first day it traded, it touched 100 almost, and then it tried it again and then raced up, and people missed it, right? And then it came back towards 100, and then people bought it, and then it ran up, and then it came back towards 100 again, and people bought it, because everybody that missed it here, everybody that missed it here, they don't want to miss it here, they don't want to miss it here. So if markets hold up, Alibaba has no Alibaba issues to drag it. I mean, they do 9 billion in one day. So it's a blinded, I would buy calls, I would buy Alibaba for the long term, and I wouldn't sweat it. So I did buy it on every dip. Wasn't a genius, but that's just my thesis on it. Twitter is the same way. I said go long Twitter last week. If somebody did, I'm on record of saying it on a web show, and I was interviewed. And if they did, then they're up 11, 12%, I think, since the day I said that. Same deal with Chipotle. They always surprise. Long term, it's like over $700 now. When do you think they're going to say, we're splitting the stock? And a lot of sheep will join, oh my God, they're splitting, we've got to buy it. And they'll buy the split announcement. So long term, I would carry Chipotle just for that reason, even though it's not a reason to buy it, but it happens, okay? Apple, it's a well-oiled machine. It would take a really big idiot to mess up Apple. I used to say the same thing about Facebook, but I'm no longer sure about that anymore. I said a billion user, how can you mess it up? But I don't believe the billion user part. And I have a couple of accounts on Facebook, and I don't use either. So anyway, opportunistic longs, I'm sniping Priceline, I'm sniping Google, I'm sniping major oils. I have not done any of those yet. Why major oils? Because if really oil had reset, there's going to be a debacle. A lot of companies are going to have fire sales, and these guys are going to survive and buy assets for dirt cheap, and they will eventually rebound. Bearish markets in general. Tesla, I think it's completely misread, long-term short. Home builders maybe, because rates, if they're going to go up, eventually, maybe long-term short. And a few momentum stocks that don't deserve to be up there, because if markets correct, momentum stocks are going to correct faster. Okay, so I asked myself when we were at all-time highs and towards the end of the year, everybody say, oh, there's so much money on the sideline. Well, here's my thought. I said, what would new money do from the sideline? If I had $1 million to go into the market at all-time highs, am I going to go in long? Heck no. I'm going to mostly go in short. There's no way I'm going to chase the market up. And this is smart money because they've been on the sideline. So it's not a blind. When you decide to invest, you don't just invest. You need to develop a thesis. In order to develop a thesis, you need to do homework and figure out what's going on with the world. All right, so now talking head is done. So what do we do? Method. Okay, now we're ripping through the bullet points because that's where the meat and potatoes are in the method. All right, so the method is very simple. When you're faced, most of you here have done investing before, have invested in something before. So the traditional method is buy and hold. Most people fit here. Or, sell and short. Very few people do that because, oh my gosh. First of all, here, your maximum loss is 100%, right? And here, your maximum loss is really infinite because as long as the stock keeps going up, you're losing money unless you cover your short. So at least here, you know how much you're going to lose. Okay, I don't do either of those two using just buying and selling stock. I haven't done that in a long, long time. Why? Because I've found a much better way, and I'll show you why. Options. It's not the same as stock options that you get when you join a company. These are contracts. You got buyers and sellers of those contracts. You can be, they are separated in two. They got puts and you got calls. So simply stated, if you are bullish a stock, you buy calls, price goes up, and you profit because that call you bought is now more expensive. Conversely, if you want to short something, you just buy puts, and the maximum you can lose is the money you pay for the puts, and if the stock price drops towards those puts explode in price, and then you sell them for more. Very easy. So, but that's just a simple way. There are hundreds of strategies available using options, hundreds. And if I'm conservative, they allow me to get, I told you I'm conservative, but I'm competitive. They allow me to get competitive in a conservative manner. Does that make sense? When I say I do options for a living, people say, you're conservative? You're crazy. I hear options, you can lose all your money. True. But there are hundreds of strategies that are a lot safer. Shane, before me, spoke about you need a sandbox in order to practice safely. There's no safer way of practicing than using spreads if you want to use real money, because with the spread, as soon as you enter a trade, you know exactly how much you can lose and exactly how much you can make and almost exactly what are the chances of success. So you can definitely practice taking a loss, practice booking a profit early, practice leaving money on the table, which are all part of being a good trader. If you can't do any of these at any point in time, then you're going to fail like the statistic of 95%, which is pretty mind-boggling. All right, so why options? You're saying, oh, whatever. You get profits in investing. You get much bigger profits using options on the same move of the same day, and I'll show you in pictures. When you buy a stock, you got a 50-50 chance of being right. When you short a stock, you got 50-50. You can either right or wrong. When I do options, I can choose my theoretical chance of success. I don't like 50-50. That's Vegas. That's a coin flip. I want to tip the odds in my favor, and I'll show you how you can do that. When I buy a stock, if I want to buy a $1,200 stock or a $700 stock or a $100 stock, Apple, it's large money. If I want to do 100 shares, that's a big pile of money. I don't care who you are. In options, you need a fraction of that money to benefit way bigger percentages. Here, basically two strategies, long or short, hundreds of strategies. We already mentioned that. Here, you got to need to be very precise time-wise and stock picking. Time-wise, I can let's call it bend time using options because they are contracts that have lifetime expiry. Here, you borrow money sometimes in order to do those big dollars at risk, and that adds more. You need to make more in order to break even. No borrowing. You deal with your own cash, period. Why bigger bang for the buck in options? Let me show you in pictures. All right? Better bang for the buck. This is Friday Twitter, up 3% almost. So if you invested Twitter, pile of cash in Twitter, you did well. You made 3% almost, 2.76%. Well, this is what you could have made in the options market. If you owned any of these calls, these are puts. If you owned any of these calls, that same 2% on that same day, if you had invested money here, you would have made 75%, 60%, 60%, 90%, 100%, bigger bang for the buck. You can't argue with that. If you guess it right, the direction, you make more money using the options market than traditional investing. And that is true every day for any ticker whatsoever, period. There are no exceptions. All right, so having said that, this is a long story here. We can spend the whole hour at least on this one. what comes after that? So what are my methods of choice? What is my method of choice? How do I make options pay me personally, Nick? Enter credit spreads. And I should make these like dollar signs here. I get paid to enter trades. What? Yes. When I enter a trade, money goes into my account. I'm selling a lotto ticket. If you want to speculate that Apple will be on 120 next week, I'm willing to sell you that ticket. And I do it cautiously. My limit, my maximum loss is defined. I know exactly what I can lose, not infinite. And I know exactly when that bet dies, and I know exactly how much I can make from it, because I immediately get paid when I enter a trade. I define my risk size and level and my odds of success. If I want to be aggressive, I can collect way more money than I actually do. I'm conservative. I step out. This is the 50-50 line of being right. I go, hey, you know what? I don't want to mess with anything less than 90%. What? Yes, every trade, almost every trade I enter has a 90% chance of success. And I can pay my bills doing that. I can be bullish, I can be bearish, I can be both at the same time. And time is on my side. Why? Because I'm selling the option. Have you read or heard 80% of options expire worthless? Why on earth would I want to buy them? I sell them. Time is on my side. Every day goes by. If nothing else changes, I'm making money because the value of what I sold is going down. Whoever bought it, that car is depreciating. So I'm a seller of the lotto tickets. So if you have hopes of something going down to a certain level and I fundamentally believe otherwise, I will sell you that lotto ticket all day long. So here's something for you. I want you to take a minute and think about elements of a credit spread. Really, this applies to everything. Take a minute, and if you have a pen there, see if you can write down the definition for risk. Boy, I'm like all over the map with this stupid marker. See if you can write the definition of risk. Can you define it? And I'll give you like a couple of seconds to do that. Can you define it? And I bet you anything that most of you are going to be surprised at my definition of it. Right. Okay, here we go. Most of you got the risk size part. Okay, I can lose 10,000. But most of you missed the more important part of the risk, which is what are the chances of me losing? So risk is two. You've got risk size and risk incident. Okay, so risk size, how much can I lose? And risk position, which is really the incident, what are the chances I'm going to lose? This is more important than risk size, in my opinion. I'd rather risk a bigger dollar amount, way safer out of trouble, than risk a small tiny amount that I have a 50-50 chance of losing it. That's me. That's why I'm conservative. I step way out of trouble, and I play here and let them fight it out at the battle zones for the 50-50 shot right here. So risk size, that's one important point. Once I decide, okay, I'm going to risk 5,000, 2,000, 200, 10,000, whatever it is, where do I put that risk? What are the chances? Incident. What are the chances of me losing money? And then once you do that, here's the important part where everybody fails, is risk management. That's what Shane before me, the presenter, was talking about. You don't practice management. Management takes practice. I say it all the time. Practice booking profit. You know, it's very enticing to let it expire for maximum gain, or you can pay a few bucks and book the profit. Why it's important to book the profit? It's important to book the loss. And if you can't book a loss, then you're going to take a bigger loss. Because if you hesitate to book the loss and you go, oh my gosh, maybe it'll fix, maybe. No, not maybe, maybe. If you know you're going to be losing, close it and then live to trade another day. This is where everybody falters, risk management. And part of it, big part of it, this is a word I borrow, zero hopium. If you're just sitting hoping that thing, just this week I had a discussion with one of my teammates or members. He had a position in the SPY, and he asked me, what are the odds of the SPY, SPY, closing above X. I said, well, if you're asking yourself that, that means you need to move that position out of trouble because you're just hoping it closes above it. If I give you a percentage, will that make you wait? You shouldn't. You're in trouble. Get out of trouble. So risk management is where most people falter. And if you can master this risk management part, then as important as this is, placing where to place it and how much to place, this is even more important because should you one of these days get unlucky with your placement or misplace something, this will allow you to get out of trouble. So these, if you can master these, you are such a better trader at the end of the day than you started the day. And most people skip that. They just, chasing, and that's another feeling thing. If you see price going like this, and Shane mentioned that too, and you go, oh my God, I feel compelled to chase. What is chasing? You feel it inside of you. You get like, I'm missing out on something. This is where you need to step away, go get a cup of coffee, and come back. If it dropped back down, then you say, good thing I didn't chase. If it continued on running, hey, I missed it. I'll grab onto the second one. There's going to be another trade. It's not the end of the world. Everything comes back down at a certain point. So don't worry about it. Everybody misses something sometime. All right, so don't be beating up on yourself. So credit spreads are easy. They sure are. But, there are things to be considered. You got to find the levels. I just mentioned that. There's a lot of homework. You got to know the macro. You got to know the subject. You got to know the influencers. What is that? That's a very complicated answer. If it's huge. Anything that influences whatever you're trading. Okay, so you got to know what you're trading. You need a watch list, all this stuff, and you can't just jump in. I'm not trying to scare you out. I'll wrap it all up into a nice little bow at the end, trust me. Okay, and then you got to sell the spreads. That's what I do. I sell the lotto tickets outside those levels. So if I know my levels, and believe me, I know my levels, I sell lotto tickets outside those levels, and I collect the premium, and I generate consistent income. Every trade I do, I say, okay, I paid for a nice car payment here. I paid for a decent house payment here. And when you put it that way, then you can better manage the risk. This is where most traders falter. That's what I just mentioned. Discipline, discipline, that's practice. You got to practice to be disciplined. It doesn't come innate. It's not innate to be disciplined. It's not innate to say, oh, I'm going to book this loss. It's not innate to say, I'm going to leave money on the table. I know I'm going to win 90%, but I'm going to leave some money on the table. The tendency is to do exactly the opposite of the right thing. Okay, so yes, they are easy, but if improperly managed, they're just as risky as ... and as anything else, basically. Okay, so my go-to methods for 2015, more of the same. What is more of the same? Consistent base hits, far from trouble for cash flow. That's what I do. That's what I've been doing. That's what I've been helping people do for 2 years, and it's out there on record. And I enjoy doing it. By nature, I'm an engineer. By schooling, I'm an engineer. By work, I'm not. I'm a finance guy. But by nature, I'm a teacher. I love teaching, and that's why I enjoy doing this stuff. Okay, so what do I do as far as more of the same? Really, what it is. I do credit call spreads. You may have heard of them. This is basically being bearish something on bearish conviction. So if I do have bearish conviction, like if I see a pop just because, Merkel didn't say something or Fed didn't do something, that's a shortable pop. I short it cautiously. Credit put spreads when I'm bullish. I want to be bullish, but I can't change all-time highs. So I mostly bearish and some bulls to hedge. And then most of the times, which has been money, iron condors, you've heard it, fancy term, basically doing a credit put spread and a credit call spread at the same time, so all I need is for the price to stay in between a certain period of time. They've been money. And speaking of money, I'm going to show you, these are actual trades from, here are the dates, okay? So this one, let's not start with this one. This is the biggest one, most non-conservative one. Here's one that paid, 25 cents per contract I ended up booking because I closed it early. I sold it for 60 cents. I bought it back for 35 cents, and I did 20 contracts, so that's basically 500 bucks, okay, on in a day, less than a day. All right, here's one that I booked 35 cents. I'm not bragging, but I'll show you. These are base hits, right? So this is 500 bucks in one day on one trade. And here's another one is 350 on another trade, and this one also lasted one day. Both of these are 90% chance of success, by the way, when I did them, 85 to 90. Here are three that I'd let expire for maximum gain because I didn't have the chance to buy them back. The market rebounded so quickly. This one paid 1,500 times 60 cents, so that's big bucks, right? This is 300 times 35 cents. So there's another 300 bucks here. So there's about 1,000 bucks there. So it's big money. This one is 1,700 bucks all by itself. This was the most aggressive one. That's when the market tanked the day before Thursday, and on the 6th. And I said this tanking is baseless, and we're going to rebound. Boom. The easiest one was this one. On Friday morning, the market sold off, and it was down minus 22 points because the media was covering the unfortunate events in France. I said, you know what? There's no way we're going to drop another 20 points because nothing fundamentally is driving this down, it's just emotion. So I put a risk out there. I collected 300 bucks for a couple of hours, and then the yield is this one like 20%. The yield is crazy. This one like 20%. This one is 5. This one is 8-ish. I'm just doing mental math here. Maybe this one is 4%, maybe this one here on money risk, but for 2 days. That's insane, right? And very good for me in 6.5% or something like that on this one. So it's worth the risk. It's totally worth the risk because it's a calculated risk with a theoretical chance of success that's way higher than a coin flip. I wouldn't put this risk at 50-50 shot. I would put this risk at 70, 80, 90% chance of success. So this is just to illustrate to you that this is just 1 week, and it's not all the trades. These are just the trades. Actually, it may have been all the trades because I was busy with the chat room. So it's doable. It's consistent. It's a science, and when used with conviction, you can come out on top often enough to where you can consistently create income. Now, these are not slam dunk. It takes skill. It takes discipline. It takes a macro thesis. It takes someone to keep an eye on all these trades. And so, yes, they are very easy, but it is best to get help and start it right. So if you don't know anything about it, you can get started on your own. I got started on my own. Education to me is everything. I'm competitive, so I'm consistently driven to learn more so I don't lose. Lose to you, lose to somebody else. You've heard the previous presenter say you are the small sumo wrestler. I use different terminology to say the same thing. I say we're little minnows swimming in a sea of whales and sharks, so I swim close to the rocks. I always assume I'm fighting the market maker who's out to screw me. That's my assumption every day. So if I assume that, I never stick my neck out. I'm always behind a rock. So if you keep that in mind, don't ever assume you're playing against an amateur. You would be underestimating your opponent. There's no way from the chart for me to tell who's buying and who's selling. Okay? I just want to be cautious and assume every time that I'm playing against a formidable opponent. This way, I never let my guard down. And every once in a while, I see an opponent who's dropped their guard down. Like a couple of months ago, price line on a Thursday night, I was looking at the option chain, and I always say, leave room for plan B. Leave an escape hatch. Don't enter a trade where your back's to the wall, one way or another. Somebody sold me. I saw the option chain in the puts goes down, and the price line was like 12, 20, whatever. And then that same week expiration, the last put was 1,200, and the next put lower was 1150. So there was a $50 wide span with no puts. So I said, you know what? I'm going to try to buy that put and see if there's somebody foolish enough to sell it to me. I paid 55 cents per contract. So let's say I did 2 contracts, right? Or 10 contracts to make it. I paid $500 for it. If I did 1 contract, I paid 55 bucks for it. If I did 2 contracts, I paid $110 for it. And the next day, Priceline dropped to like $11.89 or something like that. And that same put I paid 55 cents for turned into like $12.50. So if I have done 10, that's 10 times 100 times $12 was the price for me to sell it the next day. I didn't write it all the way to $12. I left money on the table. I booked my profits at like $3.50 or something like that. I had a lot of people go write it longer, but this is just to illustrate that sometimes you see things like that, but it's hard to tell who's buying and who's selling. I don't know who sold me that contract, but they left themselves with their back against the wall with no protection below. And I knew the next leg of protection is $50 lower. So they were basically out of luck the next day, and it expires that same day. So they left themselves with no escape hatch. I get benefited from it. So always assume you're playing against a much better person. So then you stay out of trouble. So get help if you don't know. I started on my own. My boss eons ago in my early 20s said on Saturday, you got to go take an Excel class. I was like, what? So I go and take an Excel class, and I learned one formula. It was like a VLOOKUP formula, if you know Excel. It's like VLOOKUP this, and I was like, whoa, that's pretty cool. And then what else I can learn? I was like, HLOOKUP, oh, count A, and this, and this. It's like, suddenly I'm like coding in Excel, and I was like, oh, I love this. And then one thing led to another, and then if I hadn't taken that class, I would not be here, because that job got me into finance from the engineering and the marketing. So it just, one step leads to another. So don't stop yourself from learning. If you see an opportunity to learn for cheap or for free, take it. All right, so that takes me to the exciting part of it. Now, coming into here, you hear me rushing because I know there's not a lot of time. I'm going to leave some room for questions. And the idea of getting everything out of what I'm trying to tell you here in 45 minutes is impossible. So I want to extend to you the opportunity to learn and trade alongside of me. I'm on marketfi.com and on Twitter. You can look me up. You'll find me out there. I'm a guest every week on Benzinga web show for stocks, and it's about a half hour every Tuesday morning, 5:30 Pacific Standard in the morning, my time. So there is an opportunity here for you because I do real-time trades. I have a live chat room that's open all day. I'm in it all day. I talk on it. I get off of audio, but I'm still in the room. People ask me questions. We have a huge team of hundreds of members. They pop in and out throughout the day parts. Not everybody can hang out all day. Some do. We have professional traders. We have amateurs that are just starting, and we have people that have not even traded. They're just still doing paper trades. But the education part is tremendous. I do daily AM and PM posts with multiple posts throughout the day specific about something, like somebody say, hey, what do you think of LinkedIn? What do you think of this? What do you think of some stock I haven't even heard? I said, well, I don't know the fundamentals. I can just tell you my opinion from a technical perspective. I do videos every day, and I do weekly write-ups, and it's basically you learn what you have the chance to earn. Why do you have the chance to earn? Because I give trade alerts. I say, those trades you saw, most of them were taken by people who listen to me, because as soon as I make the trade, I announce it, say, hey, I just took this trade on Friday, 21 points, maybe it'll pay, car payment by the end of the day, and sure enough people did it. I had a couple of lotto tickets that I said, you know what, I see something in like that Priceline situation. I see something. I'm going to invest, a couple $100s in it. Feel free to follow me if not, just for the education part. And private messaging, meaning I get messaged hundreds of times because of the hundreds of members we have, and I don't mind it. I keep asking for more. The day I'm like not super busy with messaging, I send out a message saying, hey, you need to be more inquisitive. Send more questions in. And it's an environment where everybody's learning something every day, including myself. I have professional traders that are better traders than me. I am not a good timer. I'm a really good analyst in the sense where I look at the macro picture. I got to be really good with the technical part, but I put it in plain, simple English. And one of these days, if you follow me there, I'll teach you technical analysis like nobody's ever taught you before. I can guarantee you that. Like head and shoulders, right? I can tell you that in plain, simple English, and then you will never forget it. Cup and handle, inverse cup and handle, same thing. Ascending inverted scallops, I can explain that to you in plain, simple English. Inverse head and shoulder, same deal. So it's not rocket science like everybody makes it out to be. It's not zigzag, point A to point B to point C to point D, and crab this and whatever that. And anyway, it's not. Don't let it intimidate you. There's a plain, simple way of verbalizing it in English. All right, so how does that work out? MarketFi.com is who hosts my service over there. I have a couple of services in there, but the one that really is the best bang for the buck is the create income with option spreads. That's the most popular. The feedback has been tremendous, and I grow on feedback. And for this occasion here, I think the best way to do it is to allow full access. Create income with option spreads is the service. Real-time alerts. Instant notification of any commentary. Like throughout the day, if something happens, boom, I send it out immediately. Text message, email, however you set up. If you don't want to get bothered throughout the day, you can say, I just want to be notified one time in the middle at the end of the day with a recap. This, I thought I was going to open it like once or twice a week. I opened it once and never closed it. I was like, I am so much better at trading having the chat room because now I'm accountable to hundreds of people. So I wish I could share with you the price action commentary last week during one of the most violent weeks. I called it like, I'm at the end of the day, I am surprised myself. Like I saw something in Apple, and I said maybe you should sell Apple at 112. Next thing we know, it's 107.75, and then I said, okay, maybe now it's time to go long Apple, and they did in droves. And then next thing we know, Apple is way back up there. It was like the timing was perfect. Same with Alibaba and Twitter. All because of the chat room, because my eyes are peeled 100,000%, even more than if I was just trading for myself. This offer expires on Monday, so if you won't, let me see if I can plop it in. Reed, if you can help me out, I don't know how to do this. Let me see here. Entire audience. Let me see here. Did you guys get this?
Yep, that looks like it worked, Nick.
Okay, perfect, perfect. All right, so this is where you can go to sign up. MarketFi usually puts a limit as to how many people can attend. I asked them not to do it this time, so it's just a matter of expiration time-wise. The full service to income, create income with option spreads is $75 a month. It's a little less if you commit to a yearly. Most people that try it for a couple of months, they end up buying the year anyway. But for you, I really am offering to you almost free. Why is it almost free? Because I want the mental commitment. $7, come on. It's nothing, a couple of cups of coffee. And if you want to open up a whole new door like that VLOOKUP formula, you have no excuse of not taking the plunge to just see a whole. I remember the first day I learned about this. I used to trade stocks. I used to buy and sell stocks, but I used to have to use a big pile of cash to make $500 a day. Now I don't invest that big pile of cash to make $500 a day. It's so much easier to make $500. And I remember the first time I learned about it. It's like, oh my gosh, what is this world? And then I remember, whoa, I discovered the SPX, and I discovered the RUT, and the IWM, the SPY, and the NDX, and it's like, oh my goodness. What if I can tell you there's a trade that pays $5 per contract and is 20% buffer from current price? And so it's 90% chance of success. And you only have to look at it a couple of times a year. They're out there. They're out there. And the yield is about 20% on money at risk. They're out there. You can do them. That's what credit spreads allow you to do. Give me the opportunity to show you that, and I know you won't be disappointed. And it's risk-free. MarketFi has got an incredible record in guaranteeing their product. Money back guarantee. You don't like it, I'm not going to hound you. Why? I'll say thank you for the opportunity. Come visit us again. Very few people that take the monthlies and decide, okay, this is something. Most of those people, they end up taking the yearly. And anyway, I'm not saying it. I'm only saying it now to tell you that the value is there. And let me show you one last thing. I'm doing the no-no here, taking this picture off the screen. But I did bring in one last-minute picture. This is my note, part of a note that I send out every morning. This one is from last Monday before the market opened, right? We had a violent week. Would you be impressed if I told you somebody could guess almost prices on all the tickers that week? This is out there. You can dig it up. It's published. If you join, you can dig it up and see it actually when it went out. Okay, this was my write-up of the guesses. I underlined the parts that are important. 2050 is still the high point of interest. That was before the market opened on Monday. SPX closed 2045. It was actually 2049 and a half with like 5 minutes to go. All right, I said the SPY, 24 and 204 and 205, each decent support.
Hey, Nick, I don't mean to interrupt, but I got to bring on the next presenter here.
Okay.
In just 1 moment. So whenever you can finish up.
All right. So basically, every line here worked out to the ticket. I mean, you can review this after hours. But the point is, this goes out every day, updated, and it's pretty accurate. And this all by itself is worth every penny you pay to look at what we do over there. So I encourage you to also look me up on Twitter. I am at RacerNick. Let me see, did I put it here? Yep, right here, RacerNick, Twitter and StockTwits. I'm on it all day. I contribute. And I encourage you to give it a shot. $7 is nothing. I promise you the value is all there. 100% guarantee from MarketFi. No questions asked. Great team there. They support me very, very well. Reed, I can give it right back to you. Sorry I could not get to the questions, but please join or message me, and I'll get to all your questions whether you join or not.
Well, all right, Nick, I do appreciate all your time today. That was a great presentation, and I know that you really want to get to those questions, but unfortunately we did run out of time. So, guys, if you do have any questions for Nick, you can reach out to him through MarketFi, and the phone number is up on the screen right now. It's 1-877-440-9464, and I'll go ahead and I'll pop that into the chat right now so everybody has that as well. Nick, it was great having you on today. A lot of great content, and we hope to have you back on in the near future.
Sure. Thank you very much for the opportunity. I've just plopped in my an email where you can reach me directly as well if you get lost in the messaging world.
All right, perfect. And you have a great rest of your weekend, Nick, and we'll be talking to you soon.
All right. Later, Reed.